I get messages all the time asking me how I went from $100,000 in bad debt to a $13 million portfolio. By watching this show every week, I will share exactly how I did it, how I achieved it, and the lessons that I've learned along the way. So do me a favor and please subscribe to our channel. It's simple, it's free, and it helps keep the show going for you. This is where you eat and we talk about changing the way that you think about money with insights from successful investors, entrepreneurs, and everyday people taking control of their financial futures. So double check that you're subscribed, and thank you for being part of this journey.
Okay, everyone, and welcome to the Lunchtime Investor, the podcast where you eat and we talk. And we have an amazing episode today where we're going to be talking about 80% of trading and investing, and that is your mindset. And not only that, we're going to talk about the dark psychology which stops new investors and traders making money. So please make sure you stick around until the end. Now, with that being said, let me introduce you to our special guest. We have the one, the only Mr. Eamon, the Gold Success Manager here at Investment Mastery, someone who's helped countless clients achieve success through their investing and trading, and not only got the best beard in the game, he is the expert here at Investment Mastery when it comes to trading psychology and mindset. So Eamon, welcome.
Thank you for the intro. Really appreciate it. I have to say though, it's a team effort. It's not just me. It's a team effort. We've got so many people behind the scenes helping our members and students achieve the results they are. So yeah, it's not just me. I might have the title, but it's all of us. It's a collective effort.
Amazing. So Eamon, again, we are going to talk about 80% of trading and investing, which is your mindset, the psychology, which actually stops people making money. We're going to talk about how people sabotage the returns that they tend to get, and also the biggest fears and biases that they have around investing and trading. Now, I know that you speak to thousands of clients every single month when it comes to trading and investing. What would you say has been one of their biggest challenges that they face, especially newcomers to the game? What's been one of the biggest challenges that's held them back?
I think it's a combination of different emotions that you're going to feel at any given moment, like before you take a trade, during the trade, after the trade. You know, before you pull the trigger, there's going to be some fear, there's going to be some sort of apprehension as to whether it's going to go right, whether you're going to make money, whether you're going to lose money. During the trade, you might decide that, oh, it's going well, then it's not going well, and then you decide to, deviate from your plan. And then after the trade is said and done, whether it's a winner or a loser, if it's a loser, you might spiral out of control, go on tilt, maybe take another trade that is, again, moving away from your plan. Or if it's a winner, you might, get really confident and try to go in again, where what you really should be doing is repeating the cycle that got you into the trade in the first place. Okay, what am I looking for? What's the setup? What are the conditions that I need for me to be able to take the trade and then pull the trigger? So just following the plan.
Of course. Now, cast your mind back to years ago, back in the past, where you actually started investing in trading. First of all, it's making you sound very old, which you're not. But when you first invested and traded back in the university days, what would you say was your biggest challenge that stopped you being consistent?
I don't think I focused on the mindset aspect then. It was more, okay, if I get really good at reading charts and predicting where the market's going to go, then I don't need mindset. I don't need to have a strong bulletproof mindset. So in those days, it was more focusing on the technicals. It's only after you develop the skill and you start putting the skill into practice, that's when your psychology becomes more important. Because like we spoke about earlier just now, before you take a trade, during the trade, and after the trade, those are critical moments where your psychology can play a part in what you do.
Of course. And there's always the misconception, actually not misconception, but an argument. Okay, a lot of people, there's 50-50 of people going, is it the strategy that doesn't work for me? And they keep going for the get rich quick, the shiny penny. And they never blame themselves for losing money, right? It's always the strategy. Oh, the strategy don't work. Oh, they'll never make money. This. But at what point does it become you as a person that actually stops you making money? Because there is always one of the biggest challenges that people run on FOMO, the fear of missing out. And they can run on FOMO in different ways. Fearful when the market drops, And as you know here at Investor Marshall, we love when markets fall because it's the best time to buy. But they also get fearful when the market goes up, and that is the greed aspect that comes into play. And this is where I see one of the biggest challenges on especially new investors, that they come into play where they say, oh, okay, I'm not going to buy a stock because it's falling. And it's just falling lower and lower and lower. I ain't getting in. But then when the market price goes up, greed comes into play, right? And they're like, I'm jumping in, I'm getting in, I'm going to buy at the high, and then the market drops. And this is the point when it comes to emotion. We talk about it on a lot of our webinars, the Wall Street trading psychology, where you have euphoria, where you have the excitement, where you have certainty, like I knew what was the best thing. And I think that's overconfidence, that you think you know better than the market, which, disclaimer everyone, you do not know what's best. Okay, you do not know better than the market. But the thing here is the emotions play a big part. People tend to buy when price is going up and sell when prices are coming down. And that is not the game we want. Now, before we go into the poll here on the chat, what would you say would be your biggest challenge? If you had to start again as an investor, what would be your biggest challenge? Would it be the fear side, so when the price falls, or would it be more getting greedy, or actually feeling overconfident in the market?
I think they all play a role at different times. Mm-hmm. So you're going to have a challenge with fear, especially if, you're on a losing streak. You're going to fear that the next trade is also going to be a loser. Yeah. So that can sometimes hint, like, it will stop you from pulling the trigger again, even if it's an A plus setup, right? Even if it's one that you're like, okay, I know that this usually is a winner for me. Greed will come into play, and I know from experience, of course, that there's always going to be that moment where you're in a really good trade and you're like, do you know what? This could probably go up a little bit more. Mm-hmm. Or if you're shorting, this could probably go down a little bit more. And then you deviate from your plan. And then overconfidence will always, again, come into play, especially when, you're on a good streak. And you're like, and you probably don't even feel like you're moving away from your plan. Yeah. But there are moments where you are doing something different, or you're just missing a step or missing a condition. So I think they all play a role. And what's helped me is just having systems in place for each and every single one to control when I do feel fearful, or when I do feel greed or overconfidence. I have those systems in place that stop me from, or stop those emotions dictating my decisions.
Of course. And everyone would love to be a robot, right? An AI where they have no emotion involved. But emotions are always there when it comes to investing and trading. And this is why we have a strategy. The strategy is to tell you when to get in, when to get out. Now, does it 100% eliminate emotion? No. But the fact of the matter is, emotions are always going to be there. And it's all about how can you overcome that. Now, in the chat, we've released a poll, and we've got a few votes here. Before we look at the votes, what do you think they would have said in the chat? Do you think fear drives them, greed drives them, or overconfidence? Let's have a quick vote for our side. What do you think?
If I'm looking at the question, the word that pops out to me is destroys more investors, right? And I think it's greed, me personally. I think it's greed.
Okay, so let's have a look. Let's have a look. So we now see that, you were wrong, Eamon. For the first time on today's podcast, Eamon was wrong, and fear was the biggest thing, right? The fear of missing out, that FOMO. And I think this is one of the biggest things that people do feel, because you get fearful when the market drops, and you don't really want to buy, but the strategy tells us to buy at cheaper prices. But you also get fearful when the market goes up, because you don't want to miss out on that. And that's where people tend to buy as prices go up, and the biggest challenge is there. So yeah, I think fear is definitely one of the biggest, especially for me. When I first begun my trading investing journey, I wanted to get into every position. But one of the biggest lessons that I learned was, and there's so many big lessons, but the same from Warren Buffett. When others are greedy, it's our time to be fearful. And when others are fearful, it's our time to be greedy. And this is just to really understand, what does emotion do to the market? Because again, when you are fearful in the market, what do you want to do? You want to really sell, don't you? You don't want to hold on to anything, and prices begin to fall. But the bigger players don't follow that. When they know retail investors are selling because of fear, and 9 times out of 10, they've pumped that fear into the market based on propaganda, they're just buying. And this is where the term always comes to buy the dip. And we've seen it in crypto. We've seen it in the equity market. Look at the US 500. Was in a bear market in April. And 6 months later, we are now brand new all-time highs. So again, it's all about when others are fearful, we need to be greedy, but not just jumping into the market willy-nilly. We need to make sure we have a strategy that is in place. So again, I think fear does dictate that, and also a bit on the overconfidence as well. How would you say that overconfidence can damage someone's potential returns?
I think, okay, so let's say that you have a bias.
Mm-hmm.
You're expecting price to go one way, and you're really confident in the direction, and then you take a trade and you get stopped out.
Yeah.
But for whatever reason, you still feel, well, you don't feel, but your strategy is telling you, hey, listen, this play is still valid.
Yeah.
And then you go and take another trade, and you need to take another trade, and that might be because of the entry technique. Right, the entry technique might be aggressive, but that's where I feel sometimes overconfidence,
mm-hmm.
or maybe I don't know if it's overconfidence or it's like, being really stubborn in your bias,
mm-hmm.
that dictates that. But yeah, overconfidence can be, you just feel like whatever you do, it's going to work out, or it's going to work out eventually.
Yeah. Now, you use a term that maybe some of the members here who are on today's podcast might not understand, and that is bias. What do you mean by bias?
So let's say, for example, you're looking at a price chart.
Yep.
And you are analyzing what the price is doing. Is it trending upwards? Is it trending downwards? That will give you a bias. Okay, it's trending upwards. So then I'm expecting for the price to continue to go in that direction. That's my bias. Yeah. Okay,
so it's all about following the trend, would you say?
Yeah.
And one of the things that we pump through all of our membership is the trend is your friend. And you don't want to go against the market, because unfortunately, and some people don't like this, we are a small fish in a big sea. Not a big pond, a big sea. And the institutions drive the market. They don't care if you're buying. They don't care if you're selling. They do what they want to do. So why not go along with the trend? Now, I know we've got a little video here that we're going to play in a second that's going to talk about having a strategy and value that you are putting into an investment. But this is very fundamentally driven. Quickly talk about when you have a bias, you say that you look more on the technical side. What do you look at? On a technical chart, what would you try to distinguish before getting into a position?
Goes back to what I was saying before, which is the trend. Are we making... I don't know whether these terms people will be familiar with, but are we making higher highs? Are we making lower lows? That determines what the trend is,
mm-hmm.
where the trend is. But then that also gives you other visual clues as to, okay, if this trend is up, where is the price? Where are buyers more likely to be? Where are smarter buyers likely to be? And that's where we want to operate. That's where we want to wait for the price to come back down to, in the anticipation that the trend is going to continue up. Yes, there might be a little bit of a pullback, which is necessary for us to be able to get in at the right time.
Of course.
Just because the trend is up, you don't want to just buy blindly. You don't know where you're buying in the uptrend. Are you buying at the peak? Are you buying?
So wait, are you telling me you do not get greedy, and when the market makes a new high, you don't just jump in? Is that what you're trying to say?
I don't do that, no.
You don't do that.
No,
okay,
no.
Perfect. So what we're going to do, we're going to play the video because there's going to be a couple of golden nuggets
Intrinsic
here.
value, figuring out what something's really worth, and then margin of safety, buying something at a substantial discount to its intrinsic value. It's very simple in concept, difficult in practice. Figuring out intrinsic value means you need to be a good forecaster of the future of a business and what its cash flows will generate. And then the second part is difficult emotionally. You want to make money quick. The stock's really moving, there's excitement, and so being patient and disciplined and waiting for the occasional situation when you can buy at a big discount, when there's a big margin of safety.
Okay, perfect. And there was a lot of golden nuggets there. The first one is we can really say that he is very fundamentally driven on the investment approach that you take, understanding a longer forecast of an investment and where this company can go in the future. A lot of people don't want that because they are that get rich quick. They want the immediate gratification, don't they? But when it comes to the market, it's all about just spending time in the market. And for me personally, and we'll go over to you in a second, Eamon, one of the biggest valuable lessons that I get from that is price does not equal value. We say it time and time and time and time again. This was one of the biggest distinctions that I had that has helped me double my investment portfolio over the last 6 to 12 years. And this is the point that I would always be looking at is if the price falls 20%, does that mean a company's lost 20% of its revenue, 20% of its profit, 20% of its assets, 20% of its staff? No, right? It doesn't mean that, because price is the way me and you feel, the investors feel, the traders feel, and it's very emotionally driven. And again, it's all about looking at that longer term picture, because the market is going to have noise. And noise is what stops people making money, because once you start seeing the volatility, how quick price moves, your emotion's going to get involved, right? Because if you think, do you know what? This is a great stock and the price is just going to go up, you're going to be like, I'm going to get in. But then you miss the opportunity. And all of a sudden you try to find, and I've had this previously, where I would always try to find at the beginning of my journey, I missed an opportunity. Where is my next opportunity? Where's my next? And I kept chasing a trade. Chasing a trade does not get you rich. And I think that's what the centurion has said. Being a sheep chasing the crowd won't make you rich. And that's true. Okay, you need a strategy and you need to follow it to a T. But what did you take away from that video there?
There's obviously, I mean, I'm more of a, I lean on the technical side of the game more than the fundamental. Not that there's no merit in looking at the fundamentals, but just because I'm predominantly more of a trader than I am an investor. And what he said about finding an edge, knowing like there's small windows of opportunity where you know or have a good idea of what the price is going to do. I find it easier to look at the technicals to find that. Others would see, like yourself, you prefer the fundamental aspect to determine those opportunities. For me, I find it easier to look at a chart from a technical standpoint to appreciate, okay, well, where are the buying opportunities? Where are the good buying opportunities?
Mm-hmm. Yeah. And again, I feel one of the biggest challenges new investors have is because when we are looking to get into investing and trading, we have it for a reason. We've got some level of pain. We want our money to work harder for us. We want to get rid of debt. We want to raise money for our family. We want to do something. That's the reason we're getting into the market. And it always comes down to the immediate gratification. Get rich quick. That's not what investing and trading is, everyone. It is get rich for certain, as long as you follow a strategy and a simple approach. Being an investor is all about patience. Actually, being a trader is about patience as well.
Yeah.
You've got to find the right opportunity, because when you are not patient and you're chasing the returns, guess what happens? The emotions come into play and it distorts the logic of an investor or trader. Because when you get emotional, you're going to see all green flags everywhere. You're going to be like, oh, price is going up. I'm so emotional. I wanted to buy. Oh, look, could I get in this pullback? Yeah, I'm going to get in. And all of a sudden you buy at the high and then the market begins to fall. And again, the emotion is a challenge. But when someone says, Eamon, I am struggling with patience. I cannot be patient and wait for the right opportunity because I need my money to work harder for me. What would you say to that person?
I'd say it comes back down to knowing your edge and why it works. Because if you had a very clear defined edge or strategy and you know the reason why it works, I think you'd be more patient. You'd be more patient to wait for the right opportunity. So sometimes I find the impatience comes through not really knowing what you're trying to do in the marketplace. For me personally.
Okay, so would you say then confidence plays a big part to that? Confidence in the market, confidence in your strategy, and actually confidence in yourself.
It's more confidence in the approach, more confidence in the edge. Like if you can't tell me in layman's terms when you look at a chart, what is your approach? Like, what are you trying to take advantage of? That's where you need to start.
Mm-hmm. Yeah, because again, the strategy will bring you consistency. The amount of opportunities that we see in the market, and actually not the opportunities we see, the amount of trades we review. Let's go back to that way. The amount of trades we review, and you can have a trader who places 10 trades, lose 7 of them, And I guarantee the 7 losses are all not the same. They don't follow the strategy. There's always a slight difference. And then when we asked the question on why have you done that? What made you make that change? They went, oh, the first time didn't work, so I'm just going to get in again. And I changed it a bit. But one trade doesn't dictate a strategy. You don't always win in the market. And I think you know that, and I know that. You never always win in the market. And again, if you had a 100% success rate, you'd be a not millionaire, billionaire. But again, the market doesn't play that way. You're going to have losses. And it's all about not what happens in the short term over the last week. It's the last quarter, the last year. That's how a strategy is dictated, not on a couple of weeks of performance. Would you agree?
Completely. And you also need to, the thing is, for me, what I've focused on for the majority of my trading career, if you want to call it that, is the edge. Like really trying to understand what are the charts telling me. Because now I go onto a price chart with a lot of confidence, being able to read, but not read it and like with this false hope. No, reading it, but also being able to feel confident that my analysis is actually going to lead to what I'm expecting, the market to do eventually. So that I think is fundamental, because again, when you know your edge and you know why things work, you'll be more patient. I think, at least that's what's worked for me. You'll be more patient. Like I used to be that person that took 3 to 5 trades a day, 3 to 5 trades an hour, right? Now I take 3 to 4 trades a month.
Of course. Right?
Because I know my edge. I know that my approach isn't going to happen. Well, it depends on the time frame that you're looking at, but this is all like lifestyle stuff, right? Yeah. You can adapt your strategy to fit your lifestyle. But I know that if I'm going to be focusing on a particular time frame, I know that this certain sequence of events is probably only going to happen 3 or 4 times a month, and I just need to be ready for those 3 or 4 times that it plays out, or probably a little bit more, because I'm not going to win every single trade. But yeah, it just goes back down to knowing your edge. That's going to help you to be more patient.
Yeah, and again, trading is a game of probability.
Yeah.
You always want to find the high probability trades, and when you allow emotions to really come involved with the way that you invest and trade, you deviate away from your strategy. And we keep going back to that, and I know a lot of people in the chat are probably bored of that, but it's the most common thing that people have is as soon as you deviate away from the strategy because you don't believe in what you're doing or don't believe in your edge, that's when you're allowing emotions to come into play. And if we have a look at this quick Reddit post, I think this just encompasses every challenge a new investor and trader has. So I'm not even losing because of my analysis is trash. I love that. That's the first point, right? Yeah. And I see this always, that people analyze the market in such a good way. They're like, okay, the market is being bullish, it's going higher. But one thing we have to tell people is you're going to be an amazing analyst before you become an amazing trader. Because again, being an analyst and understanding where the market goes, great. A lot of people can do that. But how do you take advantage of that is where people tend to struggle. And I think this is where this person falls in. So half the time my setups are fine, and I lose because I can't stop breaking my own rules. I revenge trade after a loss. I move stop losses because it will come back. So basically moving it, if the market's going against you, they move their stop loss lower. And this is actually knowing where you are taking it to being more gambling than trading, in my opinion. You open the broker app at 2 a.m. in the morning. What are you doing at 2 a.m.?
I mean, I've done it.
You traded?
I'm not going to lie to you. I've done it.
You have?
Yeah, of course. Revenge trade after a loss, of course. Move stops because it will come. I mean, this is a lot. I don't do this now, of course, right? This is like ages ago, but we've all done it. I mean, what's the first step to change?
Understanding and admitting that you have a problem.
Awareness, right? He knows what he's doing. He just needs to put systems in, whoever it is, he or she, he just needs to put systems in place.
Yeah.
Because he knows, okay, I revenge trade after a loss. Okay, so what system are you going to put in place to stop that from happening? Again, you still need discipline in like enforcing that system. I move stops because it will come back. Okay, that's just accepting that, hey, listen, if I take this trade, where I'm putting my stop loss isn't just the place where I'm stopping my losses. This is also invalidating the trade for me. It no longer it means that what I thought was going to happen is no longer. It's not the case.
It's a kick against your ego. When you lose a trade, how do you feel when you lose it? It's like,
it's tough, man.
It's tough to take because you're like, I knew this was going in this direction. And guess what? I've had it so many times, is the market takes you out by a wick and then goes in the direction that you're trading. And that's where the emotions really come in. They do come in play. But revenge trading, just for everyone in the chat, revenge trading is placing a trade, losing that trade, and then getting back into the market to be able to come back.
Sometimes you just got to get this sort of stuff out of your system, because you'll probably do this and you'll cycle through this over and over and over again until you're like, how long am I going to keep doing this for? Mm-hmm. And then there'll be a point at which, for some people can just put systems in place from the very beginning and it will work for them. Some people need to get out of their system. Yeah,
100%. And again, the awareness of it is a problem is that first step of change. Once you admit that there is a challenge, you can then build the platforms to be able to change. And there is the common 90-90-90 rule, and we talk about this a lot with new traders, that 90% of traders lose 90% of their portfolio in just 90 days. And I fell in line with that at the beginning of my journey. And the reason for that is actually twofold. Threefold, let's just say. Number one, they don't have a strategy. Number two, they don't have risk management and they over-risk every trade. Or number three, they don't have a foundation on psychology. One of my biggest challenges, and I'm very open here, is I used to revenge trade quite a bit. And I would have a loss. It would be a kick against my ego. And guess what I'll do? I'll double the risk on the next trade and go, right, if I make a 1-to-1 and I'm risking 2%, I make back what I lost and 1%. So I make money. And then all of a sudden I lose that trade. And then I have to put in 4% and then 8%. And all of a sudden, within a couple of trades, you've blown half your account. And that is a challenge. But again, for me, one of the biggest distinctions I had is understanding the problem, as you just said, but then putting something in place. And I like to call it a circuit breaker. Mm-hmm. And my circuit breaker is, if I lose a trade in a day, I don't place another trade that day. That's one of my circuit breakers, because I know that I do get emotional at some points, especially if the trade triggers you out and then goes in your direction. It's a common thing to happen. But then if I have 3 losing trades a week, I don't trade for the rest of the week. And then that is just the point that you can still analyze the charts, everyone. It doesn't mean that you don't look at the charts. You can still analyze them. You can still say, how would it go? Yeah. But then it's all about just getting back on this. And the last thing before we move on is then going on to a demo account. If you are in a losing streak, rather than going and losing more money on your live account, just go back to a demo. See why you're losing. Okay? And go back and say, is it me or is it the strategy that's making me lose the money? So what would your advice be then for someone like that who is struggling with revenge trading, struggling with opening their broker at 2 a.m., which you've told me you've done, which I didn't actually know you've done that, and someone moving their stop losses when the market is going against them? What would you say would be your advice to them?
Well, if they're at that point, then they're aware of what the problem is.
Yep.
Or the consistent behaviors that they're engaging in that's like, that's sabotaging them. I think, obviously, reaching out for help, someone that's been there and done it, right? That's important, because, you leaning on somebody else's wisdom is going to expedite the process for you, getting to the point where, you're able to control those emotions. But I think in one sentence, it would be putting systems in place that help you to control those behaviors. So like for me, like you mentioned one of yours, one of mine is, because sometimes I might have an aggressive approach in the trade idea. So I might get stopped out, but the trade is still valid. So I'll just wait for another opportunity. Mm-hmm. So for me, it will be if I've taken a loss, then I'll wait. I'll put a timer on 3 hours. I'll let it. I'll just not do anything related to trade or anything like that. But I'll come back to the charts afterwards. There are some moments where that rule doesn't really apply. So it's about knowing when to apply that rule and when not to, because sometimes it's the trade hasn't been invalidated, but I've just been stopped out. So it's a case of waiting for the next set of conditions that says, hey, listen, it's okay to get back into this trade, or take another trade on that idea. But yeah, just putting systems in place to help you control those emotions.
And I think one of the biggest challenges that people just have generically in life is understanding themselves, right? You have to go back. You have to understand yourself and understand your behaviors and the trigger points that get you to implement that behavior. If you know that you revenge trade, what is that trigger point? Is it that you lose a trade that you were so egotistically driven by, knowing it must work, it must work, it must work, and then you have that loss? Is that something that then causes you to then go place more trades? But I think another big thing, and this is something that I didn't really have when I was starting my trading investing journey, is having the accountability, having a community, having a mentor. Yeah. That is so underrated because, again, you're going to do more for other people, number one, than you'll do for yourself. And the second point is when you've got such a supportive community, they will always be out of the box. And when I say out of the box, they've got no emotion attached to what you're doing. So they can give you real feedback without the emotion. So it's a clear lens to that. Okay. And again, when we talk about the community, we have obviously the IM community here, one of the strongest communities I know when it comes to investing and trading. And for me, it's again about wanting others to succeed and supporting others through their journey. What would you say is the most important thing about having a mentor or coach?
Them helping you to understand and be aware of things that might take you double, triple, quadruple the amount of time to appreciate on your own. Mm-hmm. Like, for example, don't do what I did. I was very stubborn. I was like, I'm going to learn it myself. I'm going to teach myself, and I'm not going to seek any help. I'm just going to do it myself. And that obviously meant that it took me double the amount of time.
How long?
So I've probably been trading now for like, I've lost count, but I've probably been trading close to like between 10 and 13 years, right? The first 5 to 7 were terrible because I just thought that I wanted to do it on my own, right?
So you thought you knew better than the market?
No, I was just stubborn. I just wanted to do it on my own. I didn't want help from anybody else. So it just meant that, you know, it took me double, triple the amount of time. Whereas if I did seek help or someone that's done it before, it probably would have taken me, you know, half the amount of time, if not less.
Okay. So I've got a quick question on that. Why? Why would it have cut the time down? So let's just say you spent 10 years to be in a position that you're in right now where you are very profitable with your trading and investing. Why would it be cut down by, say, 5 years if you had a coach or mentor?
Because through the journey, and you'll probably attest to this as well, you don't only learn what to do, you learn what not to do. And so you can expedite the process of learning what not to do by learning from somebody else who's already been through that, through learning what not to do, if you see what I mean. So instead of me testing out all of these different approaches, all of these different strategies, etc. and so forth, if I came to someone who already had a very good understanding of how price works, how to understand it, how to take advantage of it, it cuts out all of that, you know, that work that,
of course,
you know, do you know what I mean?
And I think
all of that time that you would have wasted.
Yeah, we talk about leveraging. We spoke about it a couple of weeks ago using other people's money. Okay, you can leverage other people's money. We've already had that discussion. But you can also leverage other people's experience and leverage other people's knowledge. And I think that's what the coach or mentor does there is they've gone through the journey you want to go through. They've made the mistakes you don't want to make, and they are achieving the results you want to achieve. So that's just all about leveraging their experience and their knowledge. And that's what's going to fast track you to where you want to be. And again, the investment mastery community is so amazing because it's all like-minded people that want to grow in the same area. And again, you're going to keep each other accountable. You're going to do more for other people than you're going to do for yourself. So we do have the link that is in the chat, everyone. If you want to join the investment mastery community, I believe it is for completely free. Please make sure you click that link for the upcoming stocks masterclass. Now, what would you say, and I want this in the poll, so everyone in the chat, be ready to vote here. What would you say would be the biggest psychological trap that you would have when it comes to your investing and trading? Is it A, you sell out too soon because of fear? B, holding on too long because of greed? C, chasing trends or the hype? or D, avoiding investing altogether. So in the chat, what would you say would be the biggest psychological trap that you, no one else, but you face? And I think we'll have our little game again, Eamon. What do you think they would say? So you were wrong last time, remember?
I'm not going to go what I think anybody else would say. I'm going to go for what is probably my biggest psychological trap, which is definitely... I've probably gone through a cycle of each and every single one.
Yeah.
But the one that really... Yeah, the one that is probably my nemesis is probably holding too long out of greed. Not anymore. I've got systems in place that help me to not do that anymore. But yeah, that would probably be the biggest one for me. What would be the biggest one for you?
No, wait. I think that's very interesting because we had a conversation before we even started the podcast, and the team in the background can talk about this. Is we were talking about a trade I'm in and the profit I'm in, and you went, Keith, what is your strategy? I told you my strategy, and you're saying, are you doing that? And I think that again, that is having someone that keeps each other accountable, because I was like, oh, but it's going to go to my take profit, which is a little bit lower than it needs to go, but I believe it's going to go there. And this is the problem that people have, is they hold on too long. They feel like they can make more money quicker, and then all of a sudden the market goes against them. And think of it like crypto. I've spoke to so many crypto investors, and as crypto prices are going up, there is all one common saying: to the moon. And I hate that saying. I truly do, because to the moon means you're going to hold on and you're going to wait for prices to go up and continue going up. That is a pipe dream. Prices don't just always continue up. Guess what they do, Eamon? They go up and then they begin to fall a bit. And it's all about taking profits off the table. So, Eamon, you said holding out too long because of greed. Let's see. And again, you were actually right with this one. Eamon was right. 50% of you say you hold too long because of greed. You want to make as much money as possible.
That, but
I don't know why.
I don't know why I'm celebrating that.
Okay, so if you know now that this is the biggest challenge that people in the chat are facing, how would you help them?
Okay, so what I do is, and this relates back to more trading, but you can adapt it to investing. Mm-hmm. But what I will do is, once the trade is up 2-1, so what that means for those that are new here is, it means if I've risked £1,000, I'm at least wanting to make 1,000 on the trade at the very minimum, right? 1-1. Once the trade is 2-1 in my favor, so I've risked 1,000, I'm up 2. What I'll then do is I will close half of the position. Okay. What that means is that I've banked 1%, right? Or technically, or a 1 risk or reward, right? Or 1R. The remaining volume, I then move my stop from where it was to break even. Yep. So now I got the best of both worlds. If the price continues to go in my favor, perfect. I can just continue to lock in more profits. If it goes the other way, no problem. I've still come out with something to show for the trade.
And do you do that every single trade?
No, because there are some moments where the price has already reached my overall target, in which case I just take the profit off the table.
Okay. Yeah. So it comes to the take profit. You're like, right, that is where psychologically I thought the market's going to go. I now just take it off.
Technically, where I thought technically the market was going to go anyway, or at bare minimum before the price could, take a huge move against me. So yeah, in those moments, I'll just take the full volume off the table. But if there's still room for the price to get to my target, that's when I'll put that system in place. Yeah,
of course. And again, that's just all about discipline.
Yeah,
being disciplined, being able to close the position manually and get that money off the table. And a lot of people can't do that. Yeah. A lot of people cannot manually close a position because they're emotionally attached or tied or married to an investment. So let's quickly show the screen here, because we have two areas, and one area is psychological traps that people tend to face, and also the success mindset. So if you had to choose one of the psychological traps, Eamon, from panic to sell because of the first red sign, chase hype stocks, believe that you can time the market perfectly, avoid investing because of fear of losses, or let short-term feelings dictate your decisions, what one would you say would be your biggest challenge if you started again, knowing nothing? What would be your biggest challenge there?
it's probably panic sells at the first sign of red, because with more experience and more understanding of the charts, you'll know that the first sign of red doesn't necessarily mean that, you know, it's going to go completely against you.
Of course.
It could just be a little bit of a pullback before it continues, you know, before it continues in your favor. So if I was starting again, that would probably be something, the biggest psychological trap.
Yeah, because remember, everyone, the market can't just go up forever. There's going to be pullbacks. There's going to be people taking profit off the table. Wink, wink, what you should be doing, like the investors, like the big institutions. And a sign of red doesn't mean that you are in a whole world of trouble. Remember, when there's a lot of volatility and a lot of uncertainty, just zoom out. Look at the bigger trend. Look at the S&P 500, for example. Everyone was saying Donald Trump killed the market in April because we were technically in a bear market. And where are we now? We're at brand new all-time highs. And this is why it's all about not listening to the noise, wait, and just trust in the process that you've got. So that's number one. And the second thing is people tend to avoid investing and trading because of fear of loss or failure, right? And I always look at failure in a different way. And we talk about this quite a lot because you either earn or you learn. And if you fail, that's the first attempt in learning for me. As long as you take a lesson away from the failure that you made, you've never truly failed. But people's egos get in the way of that. And they hate failure. They hate not being right. And that will be your demise when it comes to investing and trading. You're not going to be right 100% of the time, everyone. You need to be aware of that. And yeah, if you hate being wrong, we've got a bit of a challenge there. So quickly on this, if someone hates being wrong, what would be a piece of advice you would give them?
Nip that in the bud very quickly. I didn't. I hated being wrong. I always attached it to my own my intelligence. It was like a reflection of my intelligence, and that just hit my ego hugely. So it would be to just not think of the market in that way, because you're not going to win every single trade. You just have to accept that.
Yeah. You have to accept it's not always 100% success rate with trading investing. You're going to have losses, but you also have amazing gains, right? And again, it's all about just following the process and making sure that you know when to get in and when to get out and not getting emotional around that. So I think a couple of big takeaways from what we've been discussing on today's podcast. Number one, you need to set the rules before you invest and trade, right? You keep saying that you've got an edge. How long did it take you to build that edge?
Years. Yeah, years. I mean, the thing is, you don't ever stop building your edge because, you know, the markets don't stay the same forever. You have to adapt. But when you have a very good understanding of a very good foundational understanding of how price works, how the market moves, etc., and so forth, all of the drivers, you're able to take your existing knowledge and adapt it to the current market conditions. So, it did take time. It did take a lot of determination, a lot of resilience, and all of that good stuff. But if I went back now and had to do it all over again, I'd do it all over again.
Of course you will.
Yeah,
of course, right? Because it's the journey you go on. And again, I feel it is about having a foundation that you can build on. If you can't, I'll always say you can't build a house on quicksand, because if you do, over time, it might happen instantaneously, but over time, the house is going to sink. We know that. So building an edge and having a structure in place is crucial. But at the beginning, for all of the new investors and traders here, utilizing other people's knowledge and experience is so crucial. Help them build a foundation with you because they've gone through the same journey as you, right? So allow them to do that. Have some level of discipline. We say about tracking your triggers. Understand what makes you get emotional. Is it because you don't believe in the strategy? Is it because you want to get rich quick, which trading investing is not about get rich quick? Or is it because you are in the wrong position because you've done it based on emotion? And the last but no means least is having an accountability group, okay? Being in the right community. So having a great coach, being in the right community, because again, you're going to do more for other people than you are going to do for yourself. And with that being said, everyone, we do have our free one-day stock market masterclass on the 13th of September at 10 a.m. till 4:30 p.m. And we talk about building a foundation. This is the crucial bit about building a foundation. You're going to be spending a couple of hours with Marcus de Maria, the one and only, and he is going to talk to you about the foundation that he has built around investing and trading. So if you want to leverage other people's time and experience, this is the great point to go to. And guess what? Completely free as well. So in my head, I'm thinking it's a no-brainer.
Definitely
right?
no-brainer.
Complete no-brainer. Again, 13th of September, everyone, 10 a.m. to 4:30, completely free, couple of hours with Marcus, giving you the foundations that you can build upon when it comes to investing and trading. And with that being said, Eamon, what would be your last golden nugget for everyone on today's webinar? The last final thought, if you could say anything for the last time to them.
Only because habits are important.
Yep.
When you miss a habit once, it's a missed habit. When you miss it twice, it's potentially the start of a new habit.
Okay.
So yeah, that would be my advice.
And when would you say habit becomes behavior then? Because we all have habits, but when would it become a behavior? Because behaviors, negative behaviors, are detrimental to your investing and trading.
Yes. But I would say the moment that you've done it more than once is probably the moment that it's gonna develop into a habit. So, just make sure that the habits that you're sticking to, they're positive ones for you.
Yeah. And the last bit on this is it takes 90 days to build a positive or negative habit. So if you do the same thing for 90 days and you're losing money because of it, you are building a negative habit or behavior around that. So everyone, remember, master your mindset. Yes, it is about the strategy that you are implementing, having a foundation, but master your mindset and success will truly follow. And that is it for today's podcast, everyone. Eamon, thank you so much for being here and a great couple of insights and golden nuggets. And again, we always say it, never quit, everyone, because if Eamon can do it, you can surely do it too.
Absolutely.
So that is it for today's podcast, The Lunchtime Investor, and we will see you all same time, same place next Tuesday. So have a great rest of your week, everyone, and we'll see you soon. Bye for now.